Today we are on a very hot topic about tariffs, Liberty Day 1 week after, and FinTech, FinSer, what is the impact, the negatives, the scary stuff, the positives. And I have with me an amazing FinTecher from Vienna, Georg Hauer. Welcome, Georg. How are you?
Thanks a lot for having me. Great pleasure to be here, Effie.
Yeah, I mean, we are all thinking and reflecting every day in the aftermath of the Liberty Day, the big announcements, the pullback, the 90-day pause, the retaliations, all the reaction of the markets, stock markets, bond markets, major stuff. And initially, of course, we all were clear that the most impact or the severely impacted fintechs are the ones that buy now, pay later innovators and all those that have huge exposure and risk to having non-performing loans. I assume you agree that that's like the most evident category of severely impacted fintechs, right?
I think there are quite a lot of different impacts. The companies, I think, are differently impacted across the world and across industries. But I think first of all, I think there are quite a lot of surprising impacts. But I think most importantly, what the last weeks showed is uncertainty and volatility is back, and it may be higher than since a very, very long time. And frankly speaking, it became harder to plan, especially large launches and bigger investments, just because to a certain extent, we are now more dependent on political statements than we've been for a long time.
Yeah, I mean, I reflect on a sentiment that I got during the World Economic Forum back in January. Yes, there were major discussions about the uncertainties of the state of the world, not only the geopolitics, the future of work, everything. But now we are getting into another turbulent phase, or having another major twist. And many are thinking and comparing to what is happening now to 2020 when COVID hit. We have these, are they black swans? I don't know anymore what is a black swan, but definitely we are going to have to rethink adaptability, agility, and resilience. And Georg, for my audience that doesn't know your background, you are really a digital native, a neobanker, if there's such a term. You were a general manager at N26. You were a chief operating officer and a CFO at Hawk, which is a regtech, recently raised a major round, right? What are they focused on?
Hawk is the world's leading AI-powered anti-money laundering software for banks, and it's essentially keeping criminals at bay, but most importantly also keeping banks around the world compliant in a very efficient manner.
Yeah, and adaptability to new regulations, to new compliance standards will be needed with all this new trade relationships, new supply chain issues, and maybe new money, because deals may be done with different types of monies, be it stablecoins, be it different currencies going away from the US dollar, who knows? Let's start by talking what do you expect from a change of consumer behavior that will affect fintechs in this cycle?
Yeah, absolutely.
Post-tariff cycle.
Absolutely. So nowadays, I mean, I'm a venture builder for fintechs and advisor for digital banks. And so I have quite deep insights into the fintech and banking ecosystem around the world. And there are a couple of observations that we can make. So first of all, the uncertainty and higher volatility is affecting fintechs around the world. And what's important is publicly, we're mostly now concerned about manufacturing and logistics and exports. And frankly speaking, this is rightful because for logistics and manufacturing companies, let's say, American manufacturing companies that produce in China and rely on that, for them, the current situation is devastating and creating some serious uncertainty. but fintechs might be almost a forgotten victim of the entire situation for a couple of cycles, from a couple of aspects. First of all, the stock market crash also eliminated the chance for any imminent IPOs, which was particularly harsh for fintechs because there are quite a lot of very promising, huge fintechs
hyperscalers, right?
Hyperscale ups in fintech that were essentially expected to IPO. In fact, there was two IPOs this week. One of them would have been Klarna. And the Klarna was supposed to be the kickstart of an entire wave of promising IPOs in fintech. And that essentially was stopped at the finish, at the starting line. You can almost imagine the fintechs were positioned already for the race at the start line, but the pistol never went off. They couldn't launch. So
let alone that the valuations, the expected valuations, are going to be rethought and reconsidered.
absolutely.
We come back to the market in fall. Who knows?
Absolutely. And I think what's important is an IPO isn't an exit, or IPO is not it's essentially an IPO is at the end of the day is a liquidity and a financing event. So you go for IPO because you plan to use those funds in a certain manner. So I could imagine a company like Klarna had big plans, investment plans for the money they would have raised, and suddenly they cannot. They would have most likely hired additional product managers. They would have hired additional software engineers, potential maybe marketeers, and all those plans are currently need to be rethought. On the other side, of course, it also affects investors and employees that are shareholders at these fintechs, because they, of course, also would have expected a liquidity event to happen. So this is, I think, one big impact, very visible one, and so that had a very short-term impact. The other aspects that one shouldn't forget is these tariff disputes isn't just about tariffs, but it's also as a symptom that I would say the globalization of the entire world that has happened over the last decades has essentially come to a halt. A lot of countries, including the US, that so far has very much benefited from globalization, in fact, been a major driver of globalization, is suddenly essentially reconsidering their entire stance on globalization. And in a world where globalization is not halted or potentially even rethought and countries being reindustrialized, this has impacts on international fintechs, specifically cross-border fintechs that potentially, for example, are offering remittance services, which as a consequence are being used by people that live outside of their home country. Those ones certainly will be massively affected. I'm thinking here about Wise, but about many other services as well.
Pioneer and those types of companies.
Absolutely.
There's no doubt about that. And also on a strategic perspective, I'm thinking, of the big, hairy, audacious goal of Revolut to be in 100 countries, will that be reconsidered, whether it's at the scale that Revolut thinks or for other? Will we see more focus on regional markets? Will we also see from consumers making decisions and preferences that are also including local preferences versus, and this is a broader tech issue.
Yeah.
Georg, one of the things that before starting our conversation, an idea crossed my mind that hadn't crossed earlier this week, and that was about the impact of hardware and tariffs on hardware in the fintech industry. And I was thinking more about POS, hardware, and the fact that it's a huge market. Apparently, it's around 11 billion and growing in the sense that we have upgrades. We have demand for mobile POS. We have demand for POS that is NFC capable, and so on. So, and of course, most of these are produced in Asia, and this will affect companies like Square, like Stripe, like, companies that are digital, but also have they're in a network where POS is needed. And I don't have the exact numbers, but I assume that's also an indirect but important consideration.
True, but first of all, first and foremost, of course, the U.S. tariffs don't necessarily affect Europe, but the rest of the world. So theoretically, there wouldn't be a direct correlation that impacts
Well, there's
for other countries.
10%. 10% is 10%, no?
No, that's true. But I'm thinking of, let's say, if you're importing the devices that you're importing from China to other countries, they are
Yeah.
not directly affected by that.
Yes.
However, having said that, I think I think certainly there will be an impact on that, but I think that the impact would be rather felt if there's the disruption in the logistics and supply chains, if you're suddenly not able to get the amount or the type of devices that you would like to. I think the tariffs itself, I would have the hypothesis that the impact is less relevant, somewhat less relevant, because the material value of such a POS device is smaller compared to the ongoing costs. Like a lot of the POS, if you look at Square, at SumUp, even Revolut is having now their own POS devices. And of course, Stripe has a lot of the infrastructure. A lot of I would say the cost is rather the monthly software as a service or the transaction fees rather than just the POS devices. But of course, it will be felt. And it's certainly, I think the big question is, will the POS providers swallow the cost, the additional costs, or will they
Pass it on, huh?
will they be able to pass it on? So these providers will certainly be somehow affected. My personal hypothesis, however, is the biggest disruption would be if there is some supply chain disruptions, because that certainly would really bring some of those businesses to a halt.
Yeah. I mean, payments are eating the world. What JP Morgan said a couple of years ago is so true, whether we look at a rise of wallets and the opportunity in store, which is bigger than the opportunity online. All these require hardware, let alone the hardware that is required for all this AI, expected efficiencies that Klarna was dreaming of, and Stripe is actually implementing, and others. All this, maybe from a strategic perspective, will be slowed down, at least. What are your thoughts there?
Yeah. So first of all, let me give you just a play on thoughts here, where POS devices might be even more affected than through the tariffs. In the vast majority of the world outside of the West, outside of Europe and the US, POS devices don't really exist as much because credit card penetration is lower and payments happens nowadays through mobile payment directly and QR codes. Imagine there's a supply chain disruption where POS devices cannot be delivered to Europe for whatever reason. Imagine companies would very quickly potentially switch to QR codes and then realize actually QR codes are pretty neat. They might have some disadvantages. They of course don't work with credit cards, but actually such a scenario suddenly would shift the entire industry away from credit cards and POS devices in general and towards mobile payment and QR. There's of course, it's a play on thoughts. It's quite complex, this transition, etc. But imagine if Europe and the US would also switch to QR codes, this would actually disrupt the entire industry to a very severe extent. And I don't think that a lot of POS companies have really plan B if that comes.
Yeah. Now that we are on different types of thoughts or scenarios that could occur, what about the increased need for hedging, right? The increased need for managing foreign exchange, that is definitely going to happen. Are there fintechs that will benefit from these increased activities while others, are losing traction? I'm thinking of the Robin Hoods of the world that are B2C or even B2B, but any thoughts on this FX positive opportunity?
So every crisis brings or creates new opportunities, and it's up to fintechs and tech companies out there to find them. Hedging is certainly an increased need at the moment in times of volatility. Hedging is expensive, but nowadays companies and people are likely more willing to pay the price for that than they did before. So that opportunity certainly exists. With FX specifically, I could imagine that the business, the target market for hedging and for FX is becoming drastically larger at the moment because a lot of companies, they have to plan ahead and they have to they can't, I mean, since the dollar basically and the euro is becoming almost as volatile as some of the other, I would say, fringe currencies at the moment, this is creating serious implications for companies. So hedging will become certainly relevant. On the other side, I would generally say there could be a counter trend, however, that in a world of somewhat deglobalization, foreign exchange could also, I would say, generally reduce a little bit
The
because
volume, you
there
mean?
might be more domestic trade, more focus on domestic trade. Vice versa, there's one positive trend again here, and where the US dollar becomes less trustworthy at the moment. There are scenarios where other currencies potentially increase in value or increase in importance. The euro may benefit from that, but it's very likely that also other currencies such as Saudi Riyal, Chinese yuan, or other currencies might benefit of that.
Yeah, I mean, when I hear this, when I hear you speak about this, I'm thinking about whether this may benefit stable coins that are pegged to local currencies. Like I was reading the other day, the Mexican peso, I think Bitco, or I don't remember which issuer is issuing a stable coin, and will that adoption increase within Latin America? Or when we look at the map of the CIO of CIS Group here in Switzerland put out a brilliant map, a global map showing each country which is their dominant trade partner, the US or China, and you see how many more countries have dominant partner China. Does that mean that this will accelerate the adoption of the digital yuan or other such stable, either CBDCs, it's difficult to get them to the market fast enough, but it's much easier to get stable coins. And is this something, in my opinion, it's something that we should be watching?
Yeah, so stablecoins are a true game changer in the market. And frankly speaking, on the midterm, it is very likely, so at least possible, that the trading volume for stablecoins might far surpass any other cryptocurrencies, including Bitcoin. Especially because it's relevant for institutional investors at a massive scale on a daily basis. Currently, by far, by whole magnitude, it's still the USD denominated stablecoins that are relevant, USDT and USDC. Especially having spent quite a bit of the last few years in Latin America, I've seen stablecoins being essentially adopted in real life, both by companies as well as people in many countries, especially those countries with somewhat less stable currencies. Thinking of Argentina, for example.
Yeah,
So
and
stablecoins,
inflation and political
absolutely.
uncertainty and all
Absolutely.
this.
And one shouldn't forget is also that quite a few of the Latin American currencies are pegged to the US dollar or at least orient themselves. Most of, or quite large parts of Central America, for example, Ecuador, and a few other countries. And so having said that, I think there might be potential for local currency denominated stablecoins, but I think the USD stablecoins will remain quite relevant for a long time. And frankly speaking, I think they could rather almost substitute some of the use cases of the US dollar by itself, where more and more countries might rather leverage USDT or USDC instead of storing actual US dollars in their reserves. That's possible, at least on a corporate
Interesting
level.
twist. So because that's in a way, depending on where their reserves are, and I mean, ironically, Tether reserves, right,
Yeah.
are held by Cantor Fitzgerald.
Hmm.
So they're in the US. So
Yes, yes.
there isn't the sovereignty that appears, right?
Of course. No, I don't. I mean, one shouldn't be naive to think that holding a USDT or USD denominated stable coins are suddenly making you independent from US dollar. Of course not. But vice versa. At the moment, it seems very likely that it's the USD denominated stable coins that are increasing in value. Like by far, the vast
Yeah.
majority of trades and volume being held is in that currency. I personally think there could be potential for other stable coins, but euro, for example, is fairly small. And as far as I know, that's the second largest at the moment. CBDCs are different, like the Chinese yuan, for example. You can't trade it on public markets. Frankly speaking, also adoption currently is still lagging behind, even within China. So I wouldn't necessarily see that the CBDC digital yuan is playing the same category or even for the same use cases. For example, the digital euro in Europe that's supposed to come in the next few years it's a different category than the USD stable coins. And it has just totally different use cases, frankly speaking.
On the other end, Georg, I'm thinking about cash. The other day, I was at an event here in Zurich that was organized by G&D, and they print all the bills, the physical bills. So they have insights as to different trends, and they were talking about seeing an uptick in demand in certain countries for physical dollars. And I'm wondering whether this period, and we don't know how long it will last, the uncertainty and our understanding our ramifications. So whether it's 6 months or 2 years, who knows? But will we maybe have more cash tech? Revolut, for example, is it Revolut? No, Robinhood is delivering cash for private clients, a new service. I mean, Sonect from here in Switzerland was exactly that kind of cash tech where you could go to the kiosk around the corner here and, get cash. And there's more cash tech companies. Yeah. And maybe we will see more demand for all sorts of reasons. Maybe because of the cost of living, budgeting, maybe because of change in trust. Any thoughts about, of course, it varies by country and culture.
It varies by country, but I would argue if the need for cash is increasing, that should worry us. Why? Because cash is likely a last resort in times of crisis when there is potentially not as much trust in the I would say digital payment methodologies, where people might be worried if they can't pay with credit card when there's a blackout or something like that. So I personally would rather think that I could imagine some countries are now trying to get hands on more cash to guarantee the money supply in their countries, especially emerging markets, rather fearing that liquidity might be tight at some point in future, rather than having any need specifically now. Otherwise, I would say, with the one exception being Germany, by the way, Germans still love cash. Like in Germany, there was always cash tag, despite even without any crisis. But having said that, I don't think that we will ever return to a world where cash will be dominating by any reasonable means. And I think, truthfully, any cash tag would be just a certain interim stage and needs to be deeply integrated in a digital payment world.
So maybe the speed of digitalization will be affected, whether it's fintechs or banking transformation through the ripple effects.
I'm sure, but I give you an example. It's because sometimes we might think crises trigger more, I would say, more sentiment towards cash, and we see that in Europe, where indeed like people tend to now hold on a bit more cash, just intuitively for times of crisis. But for example, in Latin America, the two Latin American countries that have the highest credit card penetration, meaning they have the lowest cash usage in the entire continent, are two countries that you might not expect. The first one is Chile, one of the richest countries in the continent, which might be more intuitive because they're more Western, they're fairly rich. But the second one is Venezuela, Why that? Well, it's because of that cash becomes unpractical due to the extremely high inflation rate. So if you can't trust anymore how much money you need in order to buy a loaf of bread, you prefer buying it right away with credit card. And I remember like last year in Argentina, and Argentina is also volatile, it changes all the time. But last year, if you pay with credit card, that's what most people preferred. But if you pay with cash, even supermarkets, like a regular supermarket chain, would give you a 20 to 30% discount on cash payment. So essentially, it tells you that inflation is just a major driver in terms of the adoption of credit cards and digital payments. And it also implies that the time until when you receive the actual money from the transaction also has a cost. And when you have that high inflation,
Yeah.
that cost is, of course, much higher.
And we know it better on the business to business level, how
Yes.
important it is. But,
Yes.
looking at it also in these extreme conditions that
Mm.
I love that example with Argentina. And maybe we have a lot to learn from them. They are the country that has changed 9 times their currency, I think, right? And have yet to get it right, despite the help from the US, and despite the fact that they're a rich country in resources, right?
Sure. I mean, Argentina is a fascinating place. Probably I could spend another hour just talking about Argentina. One interesting observation, Argentina is they have one of the highest crypto adoption in the world. A lot of people, especially tech workers, are paid in USDT, very often to wallets outside of the countries, typically outside of the country, so which has both tax implications for the country, tax revenue implications, as well as specifically also trust in the local market. But it also created a lot of products where people that are earning in stable coins, not in peso, not even US dollar, they also want to spend those stable coins. And suddenly you have products in Argentina where you can pay directly from your crypto wallet via QR code at even the most random fruit merchants. Like imagine, I'm not talking about tech stores, talking about like a random fruit store where you buy a few bananas for a few cents. You can pay with crypto and QR codes, and that's really impressive.
It is impressive, and it shows how, in countries where you're trying to show people how to use the tech and get used to the tech, and we talk about, oh, it's not good customer experience. But when there's a need, a real need, and you're solving a problem like in these countries, none of that you just overcome it and use it because there's a need. And on that note, I believe that, again, we're going to see new innovations here in this cycle, depending on the new needs, whether it's for retail or for businesses. And on that note, I'd like to thank you, Georg, for this wonderful conversation.
Thanks so much.